How important is it to any of you that the pitch is made by an in-place, all-together management team that you can make an evaluation of versus someone coming to you saying, I've got the experience, but I know I need to build out my team, help me do that? Just so people can comment on everyone's mentioned management is a key issue in the pitch, but the reaction to where should management be when they come?
That's going to be a focus of the style of the investment firm. Certain firms are into nation building and certain firms aren't, and you've got to be cognizant of the style of the place you're talking to works. If you're a solo practitioner saying, I've got a better idea, and then you're rolling into a door of a group where they're looking for 3 or 4 people in order to make their decision, you're wasting your time and you're wasting theirs. So there are particular styles. Find out, where that firm that you're talking to is, or if you're a solo practitioner, find the firms that work on that basis and focus on them, and that'll be a useful use of your time rather than just spinning wheels.
Yeah, I mean, a lot of what we look at is we're not just investing in an idea or a product; we're investing in the management team. So I think it is important that the people that are there currently are key members of the team and are very good at what they're doing, but we're typically, at least our firm, not too worried if if the group's not fully there. We're willing to help bring the right people in, but it is critical that the key people in the company are very good and that's what they're doing.
I mean, it's unusual to have the whole team in place if you're an early stage company. And part of the value that we bring to the table is introduce complementary members to the team who can add value. So we don't expect the whole team to be in place, but we expect at least a couple of key people to be in place. If it's still a company product development, we expect the CTO or the engineering team to be a top-notch team to give us a level of comfort that these guys will be able to develop the product. And then we can introduce them to the management teams, the operators who actually build the company, not just the product. But it also, I would agree with the comment that it also depends on the size of the fund and the investors you're talking to. From our perspective, given that we're managing on average $400 million fund and we're looking for a lot of capital in the company, it wouldn't justify for us to be involved with 2 people coming out of a research lab and work with them on making the idea and the business plan, because these things are incredibly time consuming. So what we've done to still be able to take advantage of these ideas is put in business a very early stage venture fund here in New York called Silicon Alley Seed Investors that we backed along with 2 other venture funds, Seven Rose and Buchanan Partners. The 3 of us came together and backed these guys to basically go around the research centers and talk to people who are engineers, who are sitting in the labs, want to develop their ideas, but have no idea how to put together a business plan. So we still take advantage of these ideas, but we can't put the resources behind it. So
we're a little bit different of that. We have entrepreneurs in residence, meaning ex-chief executive officers that they are literally in our offices, meaning both in Palo Alto and here in Westport. So sometimes, entrepreneur will come. He's an R&D kind of a guy with very good idea. Like we have done a lot of those deals in security, and we have leading positions in that market. And then literally we will either have a person already related to Triumph Capital Funds that he or she can be able to become the chairman of that company or the CEO of that company. Therefore, we kind of feel we know that the capital is going to be used correctly, and he or she has experience to build up the management team. So we have done a couple of those cases, but they are taking a lot of time. And in the security practice, in our case, for example, we are associated with 2 very well-known people that they know a lot about government and a lot about industry and where they have the pain. So those 2 people, they become kind of the council members of this kind of new startup. And in most of our companies in early stage, we have to bring in a chief financial officer. I do believe it's critical in terms of the architecture of NewCo to have a very good idea, a good CEO, but also very good architecture from financial point of view, because with the new regulations, and I'm in public boards, you better make sure from day one that your books, they are very, very clean. Otherwise, you're going to have difficulty to even be bought by a public company. And it's something that the venture community has not paid as much attention, I believe, as I would like. So that, in our case, we're more flexible. We are much more sensitive what is going to be the valuation of the new company, because we feel if we put those kind of resources, we want to have X percentage. And if you look at Triumph Capital ownership, our ownership is between 20 to 40% in all our investments. So if right there, if someone comes and says, Venetia, I have an opportunity, but it's like 5-10% for us, I don't think that's our deal. It goes back to what is our characteristic of making investments. We take in a significant ownership, we put in significant resources, and we will work with another venture firm. A lot of times, I say to entrepreneurs, you need two firms would be best for you. So if we are busy, the other party can be there, and you have a balance. So that's a little bit a different twist from our perspective, because we are having, I have right now 3 people that they have incredible experience as entrepreneur residents within Triumph Capital Funds, and they stay for like 12 months, and eventually they will go to one of our new companies we're going to put together.